This is our Forex blog for March 14th, 2012, and we have so many different tools and systems and ways of trading. I like to keep the Forex blog simple. This is one of the easiest ways of trading and the most profitable on trend days. So if you're a new trader and you're overwhelmed with all the videos and different types of systems and methods that we teach, focus on this and over time learn some of the other more sophisticated methods which should help you eliminate and avoid trades that are less likely to work and focus on the highest probability trades. Let me scroll all these charts back so we can start from midnight. This is our histogram, which compares every currency to every other one using multiple time frames and 5 different statistical trend tools. In my opinion, the best 5 we've come up with over the last 6 years. We focus on Forex, and we compare the dollar to every other one. 3 of those 5 tools measure the direction that the dollar is moving, and 2 of them measure the intensity, statistical intensity. One's on a bar-by-bar basis. Each of these little histogram bars is a 5-minute period, and one of them measures the intensity over the last 30 to 45 minutes. So anytime you have a green that's at and above the dotted 80 level, that's an extremely strong currency. And when you get a pullback that has less intensity or for less period, this is 15-minute pullback here where the weakness is less and less, that previous momentum to the upside is likely to continue. And underneath that we have the daily trend, weekly trend, and monthly trend. When all the time frames line up, you're very likely to get a very strong move. So basically the Swiss is weak on all time frames, the Australian, the New Zealand, especially when you see a pattern like this, extreme weakness, very little strength. That weakness is very likely to continue when all the time frames are down. And so, 3:30 you're looking to sell the New Zealand dollar, sell the Australian dollar, and buy the strong dollar versus the Swiss. So we'll start by looking at buying the dollar Swiss today. Up until about 3 to 5, you might have anticipated the weakness coming back here, and at that point, there's more momentum to the upside. But we're looking earlier in the day to buy the dollar Swiss. In the middle here, we have the hourly moving average. When it's above that, the market's more likely to go up, and you can see during this little sideways range right here, you might have bought at 43. You always want to draw your fibs off the last wave just to get an idea where your profit target is, and notice it went right to the 1.618. Usually, if I get out of half my trade, if it stalls at another support or resistance area in this case, I'm going to usually get out of all my trade at 1.618 fib target, because about 80% of the time, 70 to 80% of the time, that's the maximum move. And when it's above the upper containment band, it's also at one of my Fibonacci profit targets I did last night. And so you're in this trade somewhere at 43, or if you waited to buy the breakout of the previous day's high, you're in here at 50, you're out at 75. And usually when it's up near a fib target like this, you're going to want to wait for a little bit more of a pullback. This isn't enough of a pullback for me, but this is. We get into this trade right here. We have a major counter trend signal right here. More than likely got out of that trade at a break even. I'll give it one more shot to go up, but it better take out the highs. In this trade right here at 55, comes back up and stalls at the high. I would just get out of the whole trade here. And once it breaks out, I more than likely would have got into this trade, would have been a break even, and then I would have bought this breakout right here at 80. And at that point, because of this counter trend signal, it might go up one more wave, but more than likely later today it's going to come crashing back down at least 50 or 60 pips. So if you want to look for counter trend trades up there only because of this signal right here, you're very wise to do so. And notice again the 1.618 fib target. It went a few pips beyond that, but that's pretty much the end of the move. And you want to trade with the trend until the market moves statistically too far. When it's above the upper containment band, it hit my 3rd fib target from last night, and because of this signal right here, very likely to reverse. I would have traded this on the long side all day and then look to be short. And the profit target for that short, which you can check later today, is usually a 50% pullback. So it's very likely to pull back somewhere down near 63. So if you're short up here around 25, 20, and get out of it around 70 even, which is higher than the 63 profit target, you're going to make 50 pips on the counter trend trade. Let's look at selling the New Zealand versus the dollar, and notice this one's also underneath the hourly. Nice little trade here. The second trade was even more profitable, about a 25 pip profit. You can use our intelligent trailing stops to get in and out when you're trading with the trend. When you're in one of the weakest currencies, when the trailing stop up gives you a sell signal, short at 81, out at 60, 21 pip. and then you had another counter trend move up. Notice extreme weakness on the down waves, almost no momentum at all to the upside. Very much a no-brainer right here. And when it gets underneath the lower containment bands, usually I'm drawing my fibs and I'm going to get out of the whole trade again at the 1.618. So if I had sold this here at 61, I'd be out of the whole trade at 20. Let's take a look at the Australian dollar as well. Weak Australian, strong dollar. When it's above the hourly, you don't want to sell, but once it comes down to the hourly and breaks down underneath here, you go short at 29. And it kind of finds support at the previous week's low monthly midpoint pivot. You wait for this counter trend move up, and this one's not quite as good as the other one because you can see there's more momentum to the upside than before, and there also was previous strength. So you don't really know what the likely trend direction is really until about right here. I mean, you never really know because even 80–90% winning trades fail 10 to 20% of the time. But usually when you see all time frames down, extreme weakness like this followed by the pullback up phase with almost no strength, there's a 75–80% chance it's going to continue down. And you only need 10 pips per day to double your account every 2 months. So one little trade like this, if you're trading for an hour or two and you catch 10 pips for the day, just as a quick reminder, if you get 10 pips per day starting with a $2,000 account, every 8 weeks you can see the account's pretty much doubled. Doubled again. And obviously you have to trade more and more lots to have this kind of a compounding effect. But nonetheless, at the end of the year, it's 258,000. So you don't need more than 10 pips per day. Or if you're going to not increase your trade sizes at this rate, it starts off with 0.4 lots. That's just 4 mini lots. That's $4 a pip. So our average loss is anywhere from 6 to 12 pips. If you take 100 trades following our system, it should be about 7 or 8 pips. So you're risking 21, 28 bucks a trade when you're wrong. And the goal is to make 1.5 to 2 times more pips when you're right. For example, let's just take a look at this right here. Pullback. Let's say you got short right here at 18 with your stop up here, 10 pip stop. Short at 18. Let's just say you got out right here. You got out at 02. That's 16 pips minus the spread. You made 12, 13 pips while risking 10. And of course, in New Zealand was a much higher probability one because it was much weaker. This trade right here, short at 63, out at 46. So again, you made more than you're risking with very high probability. Plus this trade right here, short at 81, out at 62, almost a 20 pip win while risking, again, 6 to 10 pips. And that's really the key to trading. So try to find 1 or 2 hours a day, a couple times a week to trade. Shoot for 50 pips a week net. That means if you make 30 pips one day, 20 the next, lose 15 pips the next day, the remaining 2 days you have to net 15 pips. You might make 5 pips one day and 10 the next, or you might make 25 pips one day and lose 10 the next. Nonetheless, 50 pips a week should be your goal.